What's up, everybody? Tom here with another video. What a wild 24 hours we've got starting this week. And of course, it's all because of this Evergrande situation, US debt ceiling, FOMC meeting, Fed, everything. You guys know it's all of these things and more. We always talk about how it's the thing in plain sight that ends up causing a correction or a crash in markets. And in this video, we'll try to explain whether we believe this is more of a correction, a crash, and whether there's more to come. Stay tuned to find out more. All right, guys, well, it's a sea of red in the markets. Only healthcare really held up partially in utilities throughout the session, and that's because we know they're a little bit more defensive sectors. FANG really came under fire. We saw Tesla, Amazon, Facebook, Apple, and Microsoft all down considerably. Nvidia also lost 3.59%. But is this really that much taken off the markets? Not really, and there are some key reasons why. It was much worse during the day. We saw a decline from start pretty much to near the close, and in the last hour of power, Wall Street came in buying that dip. And I think there's quite a few reasons they're buying that dip, but they were buying hard. Look across the board here. This is when Wall Street enter. We know that last hour is the most important hour to be looking at the close, and they certainly were buying and rallying those markets up across the board, ending the SPX only down 1.54% instead of 2.5 plus, and the Nasdaq ended up coming back from a 3% down plus day. If we look at the sectors, as we know, we've got here the utilities, we've got the water, we've got the healthcare up the top, losing less ground, then we've got energy losing 4.22%, and in the middle, again, that technology sector coming through. You can almost see it here on the charts. It was the stronger buy. That's what people were really getting involved in, and the financials throughout the session. If we move over to the Volatility Index and get stuck into the TA, which we will be covering, of course, today, our S&P 500, Nasdaq, Tesla, Apple, and more TA, and going through all of that, we'll notice the Volatility Index spiked above 25. We totally expected this. As soon as we got through the 50 exponential moving average on the daily S&P 500, the floodgates were opened, the algorithms got involved. And when the algorithms are pushing a market down, what happens? They tend to spike the fear index, the VIX. We've talked about how this is pretty much all we really can expect here. We're starting to get into, I guess, rarer territory for the VIX. Once it gets up to these kind of zones, it's less predictable. You know, could you see spikes into 36? Anything's possible, but it becomes one of those things that if we stabilize in the market, or even if we make it back down to the lows where we were during the previous session, it won't go as high. Remember, fear has got to do with speed and, of course, uncertainty. And speed is one of those big things that happens with the algorithms. So let's get started with the SPY, and we'll take a look at the weekly here to start off with. So the weekly 20 exponential moving average, a key buy zone that has happened many, many times throughout the pullbacks and corrections since the actual pandemic began. We've just hit that and we went straight underneath it. Now we hit another important zone. We're going to talk about options flow here in actual options markets, because we hit that 430 in the open, just after the open actually, but we hit that 430. Now this is where some key puts come into play. And between 430, 436, which was the previous supports that didn't hold, it gapped underneath that zone, and the 440, 450, we have a lot of key option strikes. Let's actually take a look at this. So expiring this Friday, 24th of September, what do we have here? A ton of puts in two locations. We've got some really low end puts here, which is surprising, but we also have a huge amount of SPY puts sitting on the 430. So this becomes one of those key technical areas that we expect to try to hold up throughout the week session. We also know that 450 is another key strike that we've seen a huge amount of call buying at. So between this zone is really where you would hope the market kind of holds between. The market is not really trying to pay out these types of strikes, especially when it's so concentrated around levels. So everything in here is relatively okay to pay out, but they get a little bit sad face at Wall Street when they pay out the strikes that are underneath or above. So 430, a very important level to be watching. When we go into something like October, let's say we believe there's going to be some consolidation around this zone, then further dropping after this week, we'll notice that actually the amount of puts that are opened through the October session are a lot less. They become more like a 420 on the SPY, a 400 on the SPY, and we expect those to stack up if we do come down. And they're all key zones. Every $10 on the SPY are all going to be key zones to put on your technical analysis charts. The other thing that's very notable is that Wall Street would probably still not want to move this thing above 450. So while we're looking at a very quick pickup here from the markets, it could be like one of those ladder approaches. We see the market go down, pick back up, go down, go into a channel, go into a range, and then really try not to go back above 450 by the 15th of October. That would be their ideal situation at this stage. If you want to have a look at the options and where they all are for the week, you can always use Yahoo Finance. I'm not sponsored by them, but it's a good little place just to be able to look at all the open interest on the calls and the puts. And then you can put in your date above 24th of September and check out all the strikes and have a look who's got things open for that week. It's something that I like to do. So let's now get into Tesla, because Tesla is another interesting one. Then we'll go back into the other indices. We'll take a quick look here, and you'll notice we've got an amazing trend line here on Tesla. It's been great buying, and this trend line is the kind of worst case scenario if it was to come down. We also saw some bouncing off our key level, 726 yesterday, and the market kind of finished with a long leg doji here, an indecision candle. We get a closure above this zone, above that 742, then we continue to move up, and I would think the market's actually recovering at that stage. We can move past 760, and then the real fireworks begin. 760, a very key longer term resistance that I would have set. And if we get back underneath this area here, then I think we move to the trend line, which is around $700. But if it does get down to 700, again, with the options, take a look at this. Look at these options expiring this week, 24th of September again. Wow, what kind of put wall is this? Check out this put wall, guys. 700 strike, a ridiculous amount of puts sitting around that level. It makes me think that Tesla really will not want to move underneath that zone. Another thing that's been happening is we look at the algo flow. We always check this every day. It's consistent with the price. Little bit of pickup at the end, maybe not the options algo flow that Wall Street's coming in, but just coming up with the rest of the market, probably retail purchasing here at the close, but very, very consistent throughout that session. Move over to Apple. Now, Apple gets a little bit more interesting. It hit right in the bottom of our box range, which we've had up since the weekend, since a few weeks ago. It came down to that 141, 142 area, and I can totally see why people were buying this level. This is an interesting level. It's a key zone. And the next key zone, if it does break below this area, will be around that 136 or our favorite level, that trend line. So around this 136 trend line will be what I'd be looking at. Previous supports for a very long time. In fact, that started in September of 20. So we've had 1, 2, 3, 4, 5, kind of 5-ish holds. If it comes back down to this level, we're going to hit the 200 daily at the same time. We might spike underneath that. You really can see how important this zone will be. That's a great level if the market was to continue coming down. And I'd be drawing this up with your supports on the Nasdaq to see whether it's hitting very, very key areas, because that is the type of stock we'll be looking at. If you're thinking about the next 24 hours on Apple, what could happen here? What are the types of scenarios that we look for? I think this is a logical kind of idea. It picks up here, goes to the 145, and at the same time, we're going to have like a 20 moving average, the 2 hour here, which is pretty much added sell value into it. The market rallies into that zone, hits the 20, maybe it's even the gap that it hits up, and then it will look for bear sellers to come back in. I think some bulls that are buying the dip right now will look to sell off their Apple around that level and then bet on that idea that it's coming back down to this zone. And if it does close underneath that, they'll look for that trend line kind of area. I'll certainly be looking at the trend line myself also. Let's take a look at Apple flow. Very strong. Wall Street across the board looking to pick up Apple through the session. I'm sure they were picking up quite a lot of the FANG. They love getting a deal on these ones at the moment for their clients. And take a look at that. The flow was a little bit stronger than actually the price itself, which is a good sign for the FANG stocks in just terms of the elasticity and the demand that's there. Move over to AMC here before we get into the Nasdaq, IWM, and some others. And you'll notice it hit that $40, got a little bit underneath it, and then rallied back to the 40. If we go down to the daily chart, this is where we expect some type of bounce if it is going to occur. We spoke about this over the last couple of sessions, and the 4 hour also created a small bullish hammer right off this zone. So if it gets that follow through, we know what we think about bullish hammers. They are an okay indicator at the correct levels of support. So if we get that follow through, really you're looking for a rally into 42.50 or 43.80. These are going to be the two areas. And 43.80, I think, will be a bit of a problem for AMC. That's probably where some sellers may come back in. If we take a look at flow again for that, it was consistent with the day, mostly negative across the session. If you're interested in getting this flow, you can do so. 7-day free trial. Jump on fxevolution.com and you can come and request this for your favorite stocks in the US, and plus all of our general weekly content, hangouts, and everything else we do. So when we move over to the QQQ or the Nasdaq, it'll become perfectly clear why people were buying certain areas. So we have really three key supports. We gapped below the first key support. We were talking about the live market, and I said, I'm very surprised that the market was opening underneath the key support. So usually a market will go bang into a key support, move up a little bit, rally, and then collapse underneath it. Because of the aggression of yesterday's market, what ended up happening was the market actually opened underneath, continued to sell off, hit the next level of major key support, and then bought off into the close. So that's a great rally. And what we kind of expect from this rally is we expect it to go quite decent, actually come back up to this level here, and then have the decision-making process. Now, we close above this level. What's logical? We close above that, we move to the 373. At this point, do we think there'll be some sellers taking profit? I would assume there would be. So around here, 374, 373, that's going to be a very key zone to be watching should it occur. I'll also be watching the 369 and having a look whether there's any signs of initial weakness on the smaller timeframes, and that's where some bears may look to short the market, because we're in instability right now. We're not exactly sure what's happening with that Chinese situation. We don't know what the repercussions are. I tend to believe they'll come and bail certain sections out, and the actual systemic effects will not necessarily be felt throughout the US economy as much as people expect. But look, anything can happen. We know that. We follow the price action on this channel as much as possible. We get underneath the 360, the bears will rejoice, because then they can move it towards the next area down here, and that will be one of those deeper kind of pullbacks. At that stage, if we got a pullback back to there, that's actually in line and incredibly consistent with nice pullbacks. 8 to 10% is a beautiful pullback, and around where it's already gone is actually a decent pullback. This is the type of thing we were looking for, we were hoping for in terms of a healthy looking market. I know you might look at it and say, well, it's not very healthy right now, Tom, but this is the type of pullbacks that we like to see. 5 to 6%, totally in line with shallower pullbacks, and we are in a fairly big bullish trend, and 8% in line with normal corrections. As deep as I think this can go right now, around here. Could it go lower? Anything's possible, but that 340 would be an extreme pullback, and I feel like that's where huge amounts of buyers will come back into the market. It's probably going to take a little bit more systemic kind of news coming out, a little bit more debt ceiling issues, maybe the Fed scaring the market or something like that, but I would be heavily looking at this weekly 50, and if that thing was tapped, it doesn't get much better than weekly 50s if you're an optimist in the markets. Let's move over to IWM, the small cap companies. They rallied fairly well. Long leg doji was created. It's in the middle of nowhere land. We talk about the 210 all the time. We talk about the 220. If this thing rallies, it might hit 220, find some resistance there. And again, if you're a shorter, you're looking for that little turnaround effect. Be short, be nimble, be quick. And if you're looking for the buy side, you're looking for it to get back above 220, move to 224. And once it gets through there, I think we're back in the recovery case. So 224 will be very consistent with things like 44.90 on the S&P 500, etc. We'll move back over to the S&P just really, really quickly. I want to show you guys the key zones here. So as we mentioned on the SPY, that 430 low was pretty important. That ends up equating to around 4,300. We are now, at the time of this recording, testing that previous supports that were closed underneath. So that's at 43.75, 43.80 area. I kind of expected the market to open around here. And if the market does rally, we expect it to go to the 50-day moving average. And this is where the sellers will be. So that's equal in these pointages around 44.30. So 44.30, a very important resistance. Where it is right now, a zone to watch. And if it cracks underneath this low, then we go down to that 42.57. And of course, underneath that, then we start talking, we go over to the weekly and we start talking about the king, the best zone there is, which is that 4,050 area. Weekly 50 exponential. Remember, that is consistent with an incredible pullback, and that pullback distance will be around 10%. That's about as much as you expect in most of these types of correction scenarios. So yeah, some interesting levels, some great zones, and it's a good time to be a trader in these markets and be nimble and quick. We'll have a quick look at the Asian session today. So I'm from Australia, so obviously I'll have a look at this ASX 200. You'll notice the previous closures here around that 72 level, previous kind of resistances became support. It actually went slightly underneath the 72, which is over here, hit 71, so that's where the resistance is. I don't mind anything in this box structure, so I can see why the ASX has picked back up. And a lot of people wouldn't know, but our market here in Australia is already actually down 7.28%. So we're in that kind of correction area. Anything around that 8 to 10, remember, is right around the zone that usually creates that bullish movement. So it's a very interesting area. Move over to Bitcoin. This was a disappointment, I'll have to say. The market pulled this one down. We had a really great looking setup. We had a great Wyckoff, and I would stick with this as being a Wyckoff scenario. Basically, we have that initial crash. We have those two tests, the stop loss kind of hunt here through that whole Litecoin disaster with Walmart fake news. And then we broke above, started consolidating, and we had a beautiful trade here on the weekend that got back up to the resistance and just wasn't able to convert for bigger highs. It's then, of course, collapsed after that point and gone all the way down to almost a 4,000, probably taking a lot of stops out. If we go back over to the daily close, you'll notice it's really trying to hold up. If it did hold this kind of zone, get a bit of a follow through on it, hopefully that's as low as Bitcoin goes. I would not want it underneath these zones in any circumstances if possible. This is exactly where we do not want it any lower, because then all bets are off. Could we go back down to the low 30s? Absolutely. BTC shorts not showing the whales are coming out to play. This is mostly probably a systemic kind of pushover from leverage and also people being scared due to the Evergrande situation, etc. And I think the BTC shorts shows this pretty clearly. I want to leave everyone with today's video thinking about a few things. Number one, is this time to panic? Not really. It's time to make more informed decisions about what your plans are. We've discussed pullbacks in the market. We've discussed neutralization since really that August period. And I guess we're being rewarded from that if we've been nimble and fast with our trades, because long holding through that time hasn't exactly been exceptional. Some stocks I'm sure are, and you guys will let me know in the comments down below. But if we have a think about the win streak. So we were on 7 wins. We're in a very interesting situation, actually a rare situation. And we know that while the next 2 months, so this month obviously being a little bit negative and a little bit crazy, and then possibly even the month after that, 64% positive. So still, a little bit crazy. If we go to the 3-month statistic and the 6-month statistic in this kind of bullish market, you'll notice that the returns become very favorable over that period. So I think that while you can be freaking out about certain things, historically, a strong market has led into strong rallies off these corrections, if the corrections do ever come, and especially when you've been in 7 months of very, very strong movement. If we also have a look here, we've got the big bits of news coming out at the end of the week. I think you should be aware that we've got the FOMC press conference coming in. And then, of course, we also have at the end of the session, let's just quickly scroll through here to the next point. Here we go. So we've got the monetary policy from pound. We've also got the FOMC statement from the US and the press conference coming out. This is all New York time, by the way. And our good friend, the Papa Pal, is coming out 10 a.m. Friday to have a discussion. So we'll know more about what the Fed wants to do. The Fed could shock the markets, but generally the market likes to kind of bull into the event, bear during the event, and then we'll find out what the real ramifications are. Have a great day, everybody. I hope you're all safe out there, and we'll see you in the next video. Remember to subscribe and, of course, smash that like button if you do enjoy the content. Bye for now.